So Fife Homeowners could be facing a lockdown post-mortgage rate rise of an extra £425 a year. QVT. Wow, this is I tell you what, I don't know if you've been watching the budget, but recently it's like I am now put together this article with my team, and it's like, wow, if interest rates start to go up this year, towards the end of this year and next year, there could be an issue for some people. So this is a really good article for anybody considering about their mortgage and they're concerned about what they're paying so far and possibly if it can go up as well. So who I brought on as a mortgage expert today. So this is Neil Bird from Cara Mortgages over in the East Neuk area. You cover the whole of Scotland effectively, Neil, don't you?
Well, all of UK to be fair,
You're working from home and everything can work swimmingly well from home, can't it?
Yeah, took a wee while to adjust last year, but when I came back from furlough July, everything's just been gone really well since then. Once I adapted to working from home, but yeah, it's been a busy year for us, that's for sure.
Fantastic. Okay, so I mean, grocery, energy, and other household prices are rising and hitting everyone's back pocket. Inflation's rising. It may feel like it's an unimportant issue, but when it comes to the cost of keeping a roof over your head, it is really important. Yet nothing could be further from the truth for many Fife homeowners and Fife landlords, because inflation over the long term is bad for the economy. We know that. The normal weapon of choice is to reduce inflation is, guess what? Increase interest rates. One club approach, as Norman Lamont, I think, said it years and years ago. We ended up at 15%.
Yeah, was it Black Wednesday or something? I think.
That was a feat. I was quite fortunate because I was on a fixed mortgage for the whole year. So it got set at the beginning of the year when it was 8%, and it went up in that year to 15%. And then by the time it came back to the end of the year, it was down at about 8% again. So I was quite sigh of relief.
Yeah.
While everybody else was really struggling as a result of it. But, you never know what could happen. I mean, there's a lot of people borrowed money at the low interest rates just now. So this could have an impact on them as well. If anybody's watching this, please feel free to ask any questions. Share this with your friends as well. Tag your friends in as well, because it's important that they need to know the expert advice from someone like Neil in order to get the best advice for what you should do next as a result of that. Should inflation continue to rise? I mean, there'll become a point where in the year where the Bank of England will need to raise interest rates from its 300-year record low of 0.1%. That's eye-watering, and it'll probably continue to do so, and as a series of further increases in 2022. I mean, what's your thoughts on this, Neil?
Yeah, I mean, obviously it's the hot topic in the mortgage market these days. Like you say, inflation on the rise, Brexit, supply issues, the gas price, it's all going in one direction at the moment. And yeah, it seems inevitable that there will be rate rises. I mean, so there is a bit of misconception that some clients have had when talking about that, is because they think rate rises are going to be what the government wants to pay back the COVID debt, but that's from tax rises, not from interest rate rises. Yeah. But yeah, there's a lot of upward pressure on rates at the moment, so it's inevitable.
That then brings me back to the point that, why would we want to do interest rate rises if we can easily do tax rises? Because that will still take the demand out of the consumer pocket. Therefore, it'll curb expenditure, plus the fact we'll be able to pay back the debt. Why on earth would we want to keep increasing interest rates?
Well, I suppose, who do you tax?
Yeah. And we're an easy target. So could this be the end of the Fife house pricing boom? That's the reality. Is that possible? The dangers of the base rate rise of the Bank of England on the back of the rise of inflation itself over the past few months has actually alarmed the banks and building societies into increasing mortgage rates for both home buyers and landlords. Have you seen that coming through, Neil?
Not massively. There's maybe been a wee creep up. I mean, we have been getting more emails over the last few weeks saying rates going up by 0.2% on certain products, but then we're getting other emails from other lenders saying that they're reducing certain products. Obviously, the people with plenty of equity in the property at the moment or big deposit for purchases, they've still got access to incredibly low rates.
Mm-hmm. Mm-hmm.
But
I mean, it doesn't seem a lot until you actually punch in the numbers and actually look at it. I mean, you know, the reality is if Fife property buyers, be they landlords or home buyers, have relished the months of cut price, cheap rate mortgages. That's what it's come down to. I mean, mortgage lenders have paid the big game in the last 12 or 16 months, haven't they, to capture the mortgage business of over the 1 million Brits that have actually moved home since the end of the lockdown. Plus, many homeowners are remortgages with cheap rate mortgages are falling below 1%. I mean, are we getting 1% deals anymore?
Yeah, I mean, last time I looked, I mean, I was looking at a rate earlier on for somebody that's got what 76% mortgage, and they were still could potentially get a 1 year fixed rate from the current lender. Sorry, a 2 year fixed rate from the current lender at 1.69%.
Yeah.
So people that are below 75%, there are some very good rates out there. Also, obviously, it depends as well, because a lot of these deals below 1% were coming with an arrangement fee for the lender of £1,000 or more. So it's not always
that is where they get you, because I mean, I've done that in the past. I've looked at two different rates, and this is where they speak to a specialist like yourself. But you know, just off the top of my head, I've done it in the past where you see the two different rates and you think, okay, that one's fixed at 1.25 for 5 years. That one's fixed at 1.5 for 5 years. And one has arrangement fee, one has a lower arrangement fee. So then you have to work out the extra 0.25 and what that costs you. And then the extra arrangement fee you've got to say, and you've got to work out which one's best. But someone like you does that for these people anyway, don't you?
Exactly. Yeah, we've got access to all that information. It also depends on whether you're adding the fee on or not. But yeah, we'd certainly look to advise on. Basically, we look at overall cost. So if what's going to be the cheapest over 2 years rather than just what's the lowest rate.
Yeah.
And sometimes the lower monthly payment is important to a client and they're happy to take the fee, but quite often we'll advise them not to go for the cheapest rate because it will cost them more money over the slightly longer term.
Yeah, I mean, the money markets have already started to price into their calculations, with the Bank of England will increase base rates by 0.25% in December, up from the existing, up to 0.25, up from the existing 0.1%. I mean, I've always thought to myself they would never ever increase for quite a while yet, but I'm coming to the realization that I think that might actually happen. I mean, they're even anticipating another 2 quarter point rises by the spring of 2022, meaning they believe the base rate will actually move to 0.75% by the end of summer 2022. So why is it an issue for homeowners of Fife? Well, looking at the combined totals, this is actually quite a startling figure. Looking at the combined totals of the KY1 to KY16 postcode districts, there is actually 56,381 Fife property homeowners have mortgages totaling 3.68 billion. I mean, that's actually down from the 3.79 in 2013, which is actually quite surprising, considering you'd think as house prices go up, mortgages would probably go up as well. Therefore, the mortgage value would go up. So this suggests to me that possibly a lot of people have actually been paying down debt and might have that excess money now. That could actually be one of the reasons why we see a Fife property boom and we're seeing prices going for a lot more. I mean, would that be a logical assumption?
Yeah, potentially. If it's people have been building more equity, then they've obviously able to fund a larger deposit.
Yeah,
so that would certainly lead to an increase in values.
And there's 11,840 of these Fife homeowners with mortgages on variable rate mortgages. I mean, that is the one that you have to be concerned about, isn't it? It's the variable rate.
I mean, even before you look at rate rises, I mean, the average variable rate for most banks is probably about 4.25%.
Yeah.
Whereas, as we've just been talking about, 2 year fixed rate for someone getting 1.69 with no fees, and then you factor in a quarter to 0.75% rate rise over the next 6 to 8 months. That's going to make a big jump in somebody's payments, which they could have locked it in a rate for, well, even 5 years. The 5-year fixed rates are as low as they've ever been in history, I think.
Yeah.
And it's going to lock in that low rate, save them money every month, and guarantee that the payments aren't going to go up.
I still find that startling that there's almost 12,000 people on variable rate mortgages in Fife. And why on earth would they do that? I mean, I
Yeah.
know for some people it's maybe impossible to get on a fixed rate because their circumstances have changed. So they've been stuck with a variable rate and they can't do anything different just now. And it did happen to me in the credit crunch. But when you think about the logic, there's 12,000 people almost, sitting on variable rates, and they're paying, as you said, they're paying about 4.5% or thereabouts, when they could be sitting possibly on about, 1.5%. I mean, that's effectively a 3% saving. Now, if this is actually quite a startling one, then, if that's a 3% saving, the average size of a mortgage for a Fife homeowner is £65,000. So let's do a quick calculation for that. And our 3% of that. So 65,392 times 0.03 equals. So that would actually save someone, if they went onto a fixed rate mortgage at 1.5% and they were on the variable rate at 4.5%, on that average Fife homeowners mortgage, that would save them about £2,000 a year in their pocket.
Yeah.
That's mental.
Or the other thing is that we would look to maybe, while saving the money on the monthly payment, would actually look to take time off the mortgage for them as well. And they could literally then save 4 or 5 times that over the life of the mortgage, because you pay, not only are you getting a better rate, you're paying it back over fewer years of interest you're paying. So there could be a lot of savings to be made.
But could you imagine? This is how I think of it, right? Okay, if that's about 2,000, it's £1,961.76 for anybody. It's a bit detailed in that, just to be precise. Think about what you need to earn to get £2,000 in your pocket. You have to earn possibly about 3,000, maybe 3.5 to get £2,000 in your pocket. So you're going out and having to earn an extra £3,500 just to get that 2,000 in your pocket. And yet potentially, if you go to someone like Neil and a mortgage broker, he can actually probably look at your variable rate now and actually save you that amount of money just in a savings. So why do more people not do this?
I don't know. It's something we've been looking at a lot with our social media posts as a company. Even before there was been talk about rates rising, just the fact that rates on offer have been so low that the people are missing out on these savings just because they can't be bothered to look at moving. And
I think you said it to a degree. They can't be bothered looking at moving. They don't actually realise that it's that important to them. If you were to go ahead and say, I tell you what, give me access to your bank and I'll take £2,000 out of that right now, you'd be up in arms, you'd be on to the police, you'd be going mental. But the reality is, that's effectively what's happening right now for people that are mostly on variable rates, because they've not got a really good rate just now. And as you said, there's 5-year fixed rate deals out there right now that are actually saving you an absolute fortune. Plus the fact they're also giving people certainty, aren't they?
They are. It gives people that peace of mind that regardless of what happens with the economy over the next 3 to 5 years, their rate's locked in and they don't have to worry about it.
And for people out there as well, I think it's important to realise that even though you lock yourself into a 5-year fixed rate deal, if you decide to move house within that period, the mortgage lender allows you, more than likely, Neil, you can correct me on this, allows you usually to port the mortgage to the next property, don't they?
Yeah, most certainly your mainstream lenders, your high street lenders, most products are portable. Obviously, it will be subject to underwriting on the new property at that time. But as long as you follow the correct procedure, then it's definitely possible to do that with getting hit with the penalty.
So this is where I come up with the base rate, the amount of £425 a year. If the base rate was to rise to 0.75% of the average Fife homeowner with a variable rate mortgage, would be £35 a month worse off as a result. And effectively, we just spoke about how they could potentially, if they're on a variable rate just now, they could probably save almost £150 to £200 a month. If they were on a variable rate mortgage. But again, they need to speak to a professional like yourself that understands that and is qualified to do that for someone.
Yeah. And that's on the assumption, Jim, that the banks only apply the same interest rate increase as the Bank of England, which most variable rate mortgages are not actually directly linked to the base rate. So a 0.25% rate rise by the Bank of England could lead to your own bank increasing by 0.5. They've got the freedom to do that. A lot of people don't realize that.
Yeah, this is all to do with the money markets and the expectation that they think they might have to forward buy money, from the market a lot earlier than and a lot higher rate than they expect. So then that's why they tend to err on the side of caution, isn't it?
Yeah. Plus, they've got obviously savers demanding that with rates going up, that they get a higher rate of interest on the savings, or a rate of interest, because let's face it, not many people are at the moment. And so, yeah, they make a lot of that money from their mortgage lending.
Yeah. Good morning, James. How are you? We're almost at lunchtime. If you've got any questions, James, please feel free to ask. James is a buy-to-let investor, very successful so far and doing very, very well in his portfolio. Okay, so the mortgage price war with the banks and building sites have been fighting recently has resulted in the falls in the month-to-month average rates available to borrowers. The economy is awash with cash looking for a home, mainly down to the government's and Bank of England's intervention in keeping the UK economy going during the lockdown period. It's amazing to think that in the credit crunch, there was no money available. And now it's like they're trying to throw money at you left, right and centre. There's a wash with money. But at the end of the day, that's the bank's business, isn't it? It's just to lend. That's what we're in the business of doing. And I mean, this then comes to, for those with large deposits, which this has meant mortgages have been available at less than 1%, as we've said here. However, with the reports of the Bank of England interest rate rising soon, with Fife Homeowners, who are on a variable rate mortgage, are probably going to be the first will feel the influence of any base rate increase. This is actually quite a good one as well. If the Bank of England's base rate rose to 3%, the average annual mortgage payment, assuming, again, what we'd said before previously, would, for those Fife homeowners on a variable mortgage rate, would rise by £1,962 per year. That's the figure I just spoke about. So if somebody's on 4.5%, they're going to end up possibly being on 7.5%. So instead of actually saving that money like we were talking just now, that could cost them that extra money. And then you have to go and earn £3,500 at your work in order to get that money in your pocket to pay your mortgage. Would it not be better just to go and fix your mortgage?
Yeah, I mean, you're effectively almost £4,000 worth a year worse off by
It's
just
something.
take advantage.
Yeah, exactly. You're 4,000. That's it. You're probably £4,000 a year worse off if you sit and do nothing, and you're on a variable base rate, a variable mortgage rate just now. This could mean Fife owners with a variable mortgage rate would end up spending. This is eye-watering as well. This is getting back to the credit crunch period, or the mid 80s as well. They could end up spending half their salary on mortgage should the interest rates go up to these levels. Now, I mean, admittedly, the Bank of England won't increase these rates overnight. So, because it will spook the market in the whole sense. They'll probably increase it in a few months by 1/4% each time. And thankfully, over the last 4 or 5 years, over 9. Well, this is the key here as well. This is actually quite good. I mean, you'll probably know yourself, Neil. You maybe see a lot of it coming through, but in terms of what's happening over the last 4 or 5 years, about 90% of all new mortgages are getting fixed rates. Is that what you're experiencing? That most people are going on to fixed rate?
Yeah, there's very few variable type rates on offer from most lenders these days anyway. Since the swap rates fell and fixed rates have been we've been saying they've been at historically low levels probably now for the last 4 or 5 years, and obviously it's dropped even further during COVID and over the last 12 months, or 18 months. But most lenders, because the base rate's been so low, even at 0.75, that's a very low base rate. But for COVID, we were all saying that interest rates weren't really going to get any lower. They could only really go in one direction. So what's the point in offering a rate that's only likely to increase? So very few lenders have been offering variable type rates. There are 1 or 2 out there. You do have the access to some that don't have early repayment charges. They do suit some clients. But for the most part, fixed rates, especially higher loan to value, because from the lender's point of view, if you've only got a 5 or 10% deposit, they don't want to take the risk of giving you that mortgage at what is already a higher interest rate because of the risk, and that then increasing even further because of rate rises. So fixed rates have definitely been the way to go, and over the last 5 years have definitely come closer to the 2 or the 3 years available. Traditionally, they were always a bit higher, which is why not everyone went for the longer term fixed rates. But in some cases, they've been as low as the 2-year fixed rates over the last 12 months.
Yeah. Well, so thankfully people have been doing that over the last 4 or 5 years, and you guys have been advising them of that, and that's good as well. And if you have less than, I think the key here is even if you have less than 1 or 2 years to go on your existing fixed rate deal, the fixed rate deal you actually got before might actually be a lot more than what you can get now. As a result, you could probably be a lot better off. So it is about seriously taking advice from someone like yourself, though, just to make sure you're in the prime position to actually do something or not do something, so to speak. I mean, you're not going to, if you know somebody's got a good rate deal, you're not going to automatically want to put them on another deal just because it's a fee for you, are you?
No, I mean, we're obviously a highly regulated industry, and as a broker, it's my job to work out, is it viable for somebody to pay an early repayment charge to save money on a new deal? So if you've got 6 months left on your current deal, we have to look at the size of the penalty, and over the next 6 months, would the lower rate save you enough in interest to justify paying that? And then we've got to look at the risk of what rate rises, what rates are likely to be in 6 months once the deal runs out. So we've got a lot of analysis we need to do in the background to justify that to our compliance before we can tell the client that it's good advice to do it. But we've got the tools, we've got access to the products to do all of that for the client. And I mean, we're a whole market broker. We've got access to over 90 lenders across the UK, and there's almost always a better deal than your own bank's giving you.
Yeah, I would say that. I mean, it's amazing how many people just have the apathy and they just go back to their bank and they just say, oh, well, they'll sort me out. But the reality is you often have mortgage products from that same bank. Actually, you get a better deal.
Quite often, yeah, because we're doing all the work. So
I suppose when you think about it, that's what I've always thought that. I've always wondered why. And it is effectively because I never thought about that. You're doing all the work. So you're obviously cutting out that they're able to pass on the savings as a natural result. I mean, a further message to the 1 in 5-ish Fife homeowners on a variable rate. Please take some advice from a qualified mortgage advisor like Neil himself. Mortgage rates can't get any lower, and all the signs are showing that they will be going up. Okay, take heed. This is definitely a warning. The mortgage market is still extremely competitive. There's an opportunity for borrowers to lock in the ultra low mortgage rates just now, and as likely base rates will come through as well. So will an interest rate hike crash the Fife housing market like the early 1990s? Let's look at that. Well, the early 1990s saw repossessions go through the roof as homeowners defaulted on their mortgage payments because the increased mortgage rates. Also, in the run-up to the credit crunch in 2008, Northern Rock were lending at 125% of the value of the property. That was mental. I remember that. Somebody actually tried to get me on that mortgage rate, and I went, no, that doesn't seem right at all.
I still speak to clients that are still on that mortgage because they've never been able to get off of it.
Because they're stuck in it, effectively. Yeah. And that will be a variable rate, won't it?
It'll be a variable rate by now, yeah. And
so they'll be paying that huge amount, that extra £2,000 on average.
Yeah,
as a result.
I think generally you're speaking well over 4% for people that are on the what used to be the old Northern Rock Together.
Yeah, that's crazy. Other banks are recklessly lending. Other banks were recklessly lending 8 or 9 times the person's income without the person having to prove the income. Both scenarios were significant contributed factors to the housing crash in 1990 and 2008. But thankfully, well, you know what's happened here. In 2014, the Bank of England implemented the recommendations of its own mortgage market review. And the mortgage market review forced banks in building sites to stress test mortgages and on borrowers and potential increases. You want to talk about that a bit, Neil, about stress testing and what that involves?
Yeah, well, the way a lender decides how much money they can give you, has changed from Northern Rock, what they used to do is they take your income, multiply it by 4.5 times or whatever, less any monthly payments for loans, and that's how much you could borrow. It didn't matter whether you were 55 or 25, or whether you had 3 kids in the house or not, but they effectively applied almost the same calculation. These days, lenders use an affordability model that takes all these things into account, because obviously the shorter the mortgage, the higher the monthly payment, the less affordable it becomes. And how many kids have you got to feed and take to school? What's your council tax bill? What's your gas and electric, your transport costs, and all these kind of things. So that generates a figure based on, this is what you could lend given current interest rates. But in the background, they also have to look at what would happen if rates rise over the next 3 to 5 years. So
I think that was up to a base rate of 3%.
Yeah, and I think most lenders are probably stressing at probably about 5.5 roughly anyway. So that's all built into the background. So in theory, if you've had a mortgage taken out in the last 3 or 4 years and your income's not dropped, it should have been stress tested to make it affordable. But just because something's affordable, sorry,
it would have to have been done.
It would have done. Yeah, it's by law, the banks have got to do it, and it's all built. When you come to a mortgage broker, we tell you how much you can borrow from ABC Mortgages. That's already been calculated in the background by ABC Mortgages, built into that calculation. So yes, 0.25%, 0.75 rates for most people, unless they've taken on additional debt, should be affordable, but it's still money that you're potentially throwing away.
Yeah, and thrown away. But again, the people on the variable rate, there are 12,000 people right across Fife. I mean, there's a potential to save £2,000. That's effectively a holiday to someone. Imagine your bank giving you a holiday every year. But if you look at it like that, that's what you'd be saving if you move to another lender, and that's speaking to people like yourself. Fundamentally, as we go into 2022. The housing market is built on decent foundations, unlike 2007, with the poor lending practices of the lenders. Yet the increase in base rates will have another influence in that process. Psychological factor also perceived increase in mortgage costs. It might be enough to cool the enthusiasm of an excited buyers to pay top dollar for the next Fife home. And that might not be a bad thing. And I'm quite frank. It's like, we kind of need to level this off a bit. I mean, it's the fizz in the housing market's just going up and up and up. And there's almost no end in sight the way this is going. Many Fife homeowners have actually been wary of placing their house in the market because they're scared they won't actually be able to find another home. And a slight increase in base rates actually might take the throttliness out of the Fife market and return it to some sort of normality. And I'd even go as far as saying house prices might ease back, so it's slightly coming into line over the next 12 and 18 months. So, I mean, the reality is, the key here is, so don't be alarmed if house prices in Fife do drift slightly over the coming years like they did in the mid-1990s. That's nothing to be concerned about. It's just the property market settling down and coming back to some sort of equilibrium, which is good for everyone. So, what's your final thoughts on this, Neil?
Yeah, similar to you, the market is in a much better place. I mean, point you made before about we're going through a pandemic, but the banks have still got money to lend. Very different from 2008, 2009, when the whole problem was that the money had just gone down a black hole.
Yeah.
So all these changes that they've put into place, stress testing, capitalization, having money in the background to, obviously, if you take on lend a 90% mortgage as a bank, you've got to have enough money in reserve to cover that mortgage if it falls over, which they never used to have pre-credit crunch. So that's why Northern Rock effectively went under. So yeah, and also, like you say, in terms of slowing down the market, it's not a bad thing. We've got a lot of young buyers out there who struggle to buy properties just because they can't compete in the current offers over 15-10% over asking prices, that kind of thing. It's all very well having access to 90 and 95% mortgages these days, but in an ever increasing market, once you get to a closing date, if you haven't got that extra 5, 10, 15%, you're still going to struggle.
We almost have a party in the office when a first-time buyer manages to buy something. It's, generally, it is a real great occasion. It's a great feeling as well to realise we've got somebody on the housing ladder for the first time. I mean, my final thoughts on this: if mortgage lenders are already priced in the Bank of England's potential rate rises, even if the rates rise, it's no case to panic. And even if they do rise to 3%, it would still leave them at levels looking exceedingly cheap in order for time over history. Now, many homeowners in their 50s and 60s can remember the mortgage rates at 15%, like we spoke about before. So take advice from your family. Interestingly, the 50-year Bank of England's base rate average over 50 years is actually 7.2%, which is actually quite surprising. So buying your Fife home is a long-term venture, remember. It's a huge financial decision that can give you peace of mind and superb place to live. Remember, buying the first home, it's not an investment. And I'm not saying you should avoid home ownership. However, if you consider buying because you think you're making a clever investment choice, then you've actually got to think again. Because the idea of your Fife family home can become an investment too comes from the fact that historically Fife property prices have actually risen. We've all heard stories of the family where someone had gone in and who bought a house for £500 many years ago, and it's now worth 300, 500, 1,000% more today. But if you read some of my past articles in the Fife property market, I've proven many times over there are much better ways to invest your money, like buy-to-let properties and stocks and shares and that. But if you want to bring your family up in Fife, the bottom line is that's it. Even if interest rates do rise, if not a little more than the 3% would actually predict in here, you'd still be able to get on the property ladder with a small deposit using the government's 5% deposit schemes, the 95% mortgages, like you'd said, Neil. And you still find it cheaper than actually renting a property. That's the key here. It's still cheaper than renting a property. And remember, it's horses for courses. If you buy your Fife home and look at it as an investment, it's not really, because it's just getting you on the property ladder. And then when you move to the next home, guess what? It's the same price point. It's the same. It's indexed up the same way. It's gone up in the same price as well. So if you're scaling up from your existing house that you've bought as an investment, you're buying at the same price point anyway, if not paying a wee bit more. If you're downsizing, then happy days, because you're releasing some of that capital. So you don't look at your Fife home as an investment itself. It's getting you on the property market. It's cheaper than renting, probably more than likely, if you work the numbers out first. Again, you need to speak to Neil about these numbers, because he's the professional in that capacity. But it should always be looked at that way. You should choose your home on what it is for you and where you want to bring your family up. That's the most important point for me out of this.
Yeah.
If you want any more advice, guys, please feel free to message us direct. You can message Neil as well. We'll put you in touch with him as well. I'll put the contact details on this post later on the show. And for now, it's bye-bye from us. Goodbye just now. See you later.
Bye.